Welcome to the AccendoTraders Group. This is our weekend rapid report for April 13th, 2008. AccendoTraders.com, effective trade plans delivered daily. And as you know, we have our normal routine that we go through each week, looking at sectors and looking at our watch list and setting some alerts for both our watch list and our new trades. And we also scan the sectors for trends. But first, let's talk about our economic news for the week. And you can see that the market was down. We started off with our split personality by first starting off kind of nice. Washington Mutual had some investment for infusion into their company. Crude numbers came in, and we kind of had another sideways day. We had intraday highs on crude oil. Then Walmart came in to try to save the day by raising its first quarter estimates as some of the retail sales numbers came out on Thursday. But the big thing was Friday, General Electric missed their earnings big time, and there was a lot of discussion about why didn't they give any guidance, why didn't they, give a little heads up. And so the market really went down on Friday based on that gap down and kind of sideways and went down into the close. So this week, we have some more retail sales numbers coming out tomorrow, PPI, core CPI. We have a lot more news this week than we had last week. Tomorrow, we've got the retail sales number again that I just mentioned. No real major earning numbers coming out tomorrow, and we still have the CLF split. So let's go ahead now and look at the sectors to see what trends are. Well, what a difference a week makes. Last week we were talking about we were breaking out of the downtrend, and this week we're talking about we're back to the descending wedge. We were talking about the descending wedge over here, and now that is back. And again, so here's hotels looking like they're ready to break down. Basic materials has reached resistance and is now moving sideways. So maybe builders still positive. Utilities looking a little bullish. Builders, we said builders were looking to be reckoned with, and this week took it all away. Casinos in our MGM place, you can see casinos are looking weak. Coal, possibly. So we got coal and materials. Banks forming an M pattern, looking weak. Here's biotech and possibly a rising 3, but you can see this is a hard resistance right there. Drugs, a little blah. Internet hit a resistance level, couldn't break the February highs, possibly falling back down. Gold not being the thriller that we thought it would be. Look at software breaking down hard back into the downtrend. Here's insurance. Our oil sector is even showing a little weak there. Retail showing weakness there even after Walmart. Stocks showing weakness after we said last week that they finally look like they're breaking out. Transports looking weak. Broker-dealers weak. Natural gas showing some weakness, trace back to the 5, and oil index actually showing some weakness also. Okay, so let's go ahead and take a look at our 3 indexes, and you can see with the NASDAQ, it certainly looks like it's rolling over, heading down to this downtrend line. Definitely showing weakness, falling 3. Dow Jones, first look, remember our downtrend channel. This is it globally, and this is the middle of that channel. And you can see that looks like that's where we're headed. Failed to make new highs, failed to break the 12,750 that we've been talking about. So definitely looks like it's heading down to maybe 12,100 to the middle of this line, and hopefully a bounce. We'll see, don't know. And here's the S&P 500. Again, here's the large downtrend channel. This is the middle, and you can see Friday's action brought us right to the middle of the channel. And so we certainly could push lower, and if we push lower, we have some immediate support at 13.15, but we could fall all the way down. So certainly the market is looking weaker at this point. What I want you to do now is just take a quick look at over here in the our flag list, and you can see the ones without the checks or the stocks that I unchecked. I'm doing it this way because, again, I don't have enough time for our YouTube folks. So I want you to see which stocks we unflagged, and then I'm going to talk quickly about the stocks that we kept and why we're keeping them. So again, the checks are stocks from Thursday night that we are keeping. Stocks without the checks we're getting rid of. All right, BTU. We said the coal sector still has potential. Consolidation move here, not really on higher volume. Still think we can push higher. Put your alert at 62 to get a push higher. CAT, we talked about this one. Remember where we started with this one up here. Broke the 20. Still like it if it breaks the 50. Obviously, we have some support there. So my new alert for CAT will be $74. CENX hasn't really violated anything. We'll keep our alert at 72. CF, kind of the same thing. Still moseying along right on up. So we got to like that. So put your alert at the high of the day. CLF, our 2-for-1 split, did bounce in a market that was down, so that's certainly strong. So you got an aggressive alert right here at 143, and the conservative alert is up here at 146, 145. Aggressive alert at 143. I think I might put both. It's just an alert. Doesn't mean you're going to get in. And I'm going to keep the oil stocks in here, CVX, DO, and USO. I'm just going to assume that we had a pullback on oil, and they'll see another day. So they haven't violated the 5. So we could get a bounce here. So change your alert to 126 for DO and $90 for CVX. FCX, we like basic materials, so we still should see something there. Fizzler hasn't violated anything. Remember, this is a defined your own risk as far as where you want to get in. Goldman Sachs and Morgan Stanley definitely look weak. Now, they're way off. They are way off the 5, so this is definitely an aggressive entry if you get in below the low of today. Pot still moving along, definitely like that. Alert right around 179.50. And X and other basic materials certainly still looking good. Put your alert at 146. Okay, so let's move on to our educational portion of our trade plan. And we're using the book Trading in a Zone by Mark Douglas, and in the beginning of that book is the shift to mental analysis. And on Friday, we discussed the difference between consistent and inconsistent traders. And Mark Douglas says that the difference is that the consistent traders have learned a different way of thinking about the market, a different way of interacting with the market. And to that point, we discuss whether or not people take personal responsibility for their trades. Have they set up a system or not? And so to continue that discussion, he talks about trading being risky. There's no guaranteed outcome. Just because you place a trade doesn't mean you're going to be right. We all know that. So have you accepted the fact that what you're doing is risky? The obvious answer to that is yes, but the problem where most traders who are inconsistent fall into a problem is that they have not accepted the corresponding risk of the trade going against them. Most traders really believe that they are taking on a risk when they put on a trade, but they have not accepted the fact that it's not a guaranteed probable outcome. Furthermore, have they fully accepted the possible consequences? And obviously the consequence is that if the trade goes against you, you may lose money. So again, we talked about it's one thing to learn technical analysis and to learn indicators and how stocks may give entrance or exit signals based upon your technical analysis. But it's another thing to understand how to interact with the market, and it's another thing to understand that you may be wrong. It's another thing to understand that, and let's change that to say that your system may be wrong. Because again, we're trying to get it from you being a trader and making it a system trading for you. So if you accept the risk of that your system is going to have winners and losers, then it's okay. But too often, and again, interacting with people coming and going, I've seen that people don't take that responsibility. What they do is they say there's something wrong with the system. When it really is, they never defined their system. They're just doing what someone else told them to do. Or they say there's something wrong with their indicators, and so they start looking for more indicators. Or there's something wrong with the market. The market makers are out to get them. But really, again, there's no guaranteed outcome. And if you can accept the fact that there are winners or losers, and my job is to make my winners go long and keep my losers short so that my winners far outweigh my losers, then you'll be successful in the market. Because we put this in different places, just want to make sure that YouTube and MySpace, you do not get the full version because of the 10-minute time limit. So there's the link to go get the full version. As always, we appreciate your feedback and trade at your own risk.